Should be good.
All right, we're going to start here. Thank you for joining our professional ag marketing webinar for our crop tour results. It was a fun time traveling across to all the states. So we're just going to start with a little bit of an intro on ProAg, just give you a little background on who we are, what we do, and where we do it at here in professional ag marketing. So here, our main goal is to help farmers, producers, anyone in the risk management space work through futures and options and any risk management strategies regarding their farm operation. We are an insurance company as well, professional ag marketing. So we sell crop insurance and do LRP and LGM, and we just help with consulting on the markets, helping farmers make the best decisions when it comes to marketing things like corn, soybeans, cattle, and lean hogs there. So here, I guess the way we go about that approach is we're producers too. We have skin in the game, so we get it. We are headquartered quite aggressively in the Western Corn Belt. We'll show you a heat map of that in just a second. But some things you just can't control, so we try to help you control what you can, anyways. So next slide, you'll see our team. This will be comprised of everyone through our main core branch offices, at least through Minnesota and Iowa. So we've got a couple branch offices through Laverne, Minnesota. That'd be our headquarters. We're in Sheldon, Iowa as well, and then over in kind of by Cedar Rapids in eastern Iowa and Mechanicsville there as well. So we've comprised of risk managers and insurance workers, and then also in a few tech and IT specialists too there. So you can see we're spread out all the way across the U.S. But one of the things that we've upped our game on lately is on the Pro Ag Power side. So a lot of you on the webinar today, you haven't probably seen this yet if you're working with us, but it's brand new. We've been able to revolutionize the risk management industry using our new tools that have been provided to us by our IT team. So this would be a glimpse of one of the pages of what our web page will look like for each specific individual with risk management strategies there. So this could be tailored to your own operation, what if strategies, all of the things. So this is a really cool new thing that Professional Ag Marketing has put together, Jaden. All right, and then one of the other new tools before we get into the tour here, we do a kind of a virtual HTA program. It's ProAg Plus. It's a hedge to arrive program. So for 3 cents a bushel on corn for 1 year, you can do an HTA and deliver it to any location with no margin calls. It's a really cool way to integrate this into your risk management strategy and still be a free agent anyways. So on soybeans there, that would be 8 cents a bushel. So we're pretty excited about offering that up as well now. So let's get into the ProAg tour here. We traveled across 8 states individually. I guess the Northern Tool did a couple as well, and then about 2,500 miles there for 5 straight days. We started in Sioux Falls, South Dakota, worked our way south into northwestern Iowa, kind of eastern Nebraska, and then worked our way into Missouri on day 1, and then worked our way over to Ohio straight across, so kind of split across the halfway point of Illinois and Indiana, just above Indianapolis, and then kind of looped and wrapped our way back. So this route I've done here, this is my 10th year of doing the professional ag marketing crop tour. This route has stayed almost the same. I'll tailor it some years just to be a little bit different towards to see some stress areas or somewhere I want to go through, but almost every stop is the same year after year. So that's been an exciting portion. And then on the northern crop tour in the blue there that you can see, it's been really cool to see that northern crop tour develop over the past few years, comprised of just customer visits and seeing what things look like at home here, basically in our backyard, and some yield samples. So my 10th year, this was your second on the crop tour anyways, and it's always a fun, exhausting 5 days, Jaden. So one of the things we wanted to talk about and the way we take our samples at each stop is we compare it to the prior year's samples. So that would be what you're seeing here today, for example, out of McLean, Illinois. You can see just from a few different areas, the board on the left was this year, for example. The board on the right was last year. This is a good example of just the majority of our ears came back at a same sample for population. However, a lot less around and down, so 2 or 4 less around and maybe like 10 lower on the total long count. So that gives us a variety of samples that kind of suggest the same thing, that year over year we just see a little bit worse sample out in the field. So that's one of the things worth mentioning there. And then we can also follow maturity, since we're staying in the same field or section or same farmer, and comparing the yield samples year over year from that. And then also some of the stops there, we like to backtrack it as well. Our data just against, hey, our guess was 225 last time we came here. The field farmer said, dude, did 250. We were 25 low the last time we did this. So we take things like that into account as well for each sample, plant date, things like that, and maturity as well. So just a little bit about our sample process. On the next slide, you're going to see a little bit about weather. This year, as we get into some of our results here, you're going to see that in 2024, last year, we were really wet in like the northwest Corn Belt, kind of around north central Iowa, kind of southern Minnesota. It was very, very wet. So if you went from the planting date basically until August 8th here, it was just very, very wet. On the right-hand side, that'd be this year. Not quite as extreme, but still about Iowa. Over the month of July especially had received a lot of rain. So very, very wet through Iowa, just more spread out. And then the eastern Corn Belt, again, looking at that northern Illinois, northeastern Illinois, northern Indiana, you'll see that it was drier this year through that stretch, and through our yield samples too, that kind of is an interesting correlation based upon where that weather sits in those areas. So on the next slide, you'll see, just from a drought perspective, pretty similar year over year. Not a whole lot of drought in the United States last year in the Corn Belt either. Only about 5% of the corn production was in a drought. This year, only 3% of the corn production was in a drought at the end of July. So very minimal drought stress through this crop. Just the only thing really worth noting is that 3%, it seemed like, was more of the majority in very, very southern Nebraska this year, and then northern Illinois and kind of northern Indiana as well. The next thing worth noting is just that from a planting progress perspective, we like to follow this, especially for Ohio. We noticed this year they just had a very slow planting pace. It was very choppy and erratic. Some got planted early, then they took a big break for a month, and then they got started again. So given that erratic planting pace, we saw different maturities there in that through that part of the world. That was a very interesting area to go through for that perspective. Ohio always is a little bit variable, it seems like. It seems like they've got erratic weather year in and year out, either way too wet or way too dry. So we see a lot of variability through Ohio, at least. But that planting pace just kind of made it tough through Ohio this year to get consistent samples. And also, we could tell from just a maturity standpoint that they were behind a little bit. And even the areas that weren't behind a little bit, they had erratic growth through that crop, and that's just not the same corn crop. If it catches up in a very hot minute, the corn crop is just not the same in that state. So a few things worth noting there. Illinois, that one was a little bit slower pace as well. When I look at the good to excellent category, this is a very big hit or miss for the United States. So when I look at the good to excellent categories, historically, people would argue that the good to excellent, the crop condition ratings, do not have a good correlation with yield history. We're trending very, very solid this year on good to excellent. So that's worth noting, that just from our crop, at least, we're really strong, at least from what we think from a survey perspective. And some of those similar yield years, if you compare it, that we're trending towards, ended up with above trend line yields towards the top end of it. So I would argue in the good to excellent categories, the really strong years and the really poor years, you can kind of gather a little bit about what yield is potentially going to do, but it's after a certain point. Once you get into July, basically, if you have the relationship between July crop ratings and final yields, it's not perfect, but every year since 2010 that we've had good to excellent ratings above 70% in the month of July, uh, that's been an above trend line corn yield. So when it's really good, it seems like it's really good yields. So that'd be my correlation there between good to excellent scores and final yields. So we'll get to the nuts and bolts of it here on the next one. That's just a breakdown of the good to excellent categories. But this was our yield estimates. So on the very far left side of the sheet, you can see each state breakdown that we went through and gave a yield expectation for this next year's corn crop in that category. So for example, North Dakota professional ag marketing here, we had a 150 expected yield, and South Dakota 173, Minnesota 201. So on that breakdown, you can see that for Minnesota, for example, StoneX was at 200. Private other analysts were at 194. Their prior record was 195. So we're going to go through each state here individually for a little bit. So North Dakota, things look great there from the Northern Crop Tour. Their record was 158. A little bit of variability through the state, so they came in at a 150. But honestly, we didn't spend a lot of focus, at least you and I didn't, on the North Dakota side. South Dakota is where my home farm is from. We're in the eastern side of the state, kind of by Brookings, South Dakota. For any of you joining on from that area, at 173 there, we came in just above the StoneX estimate at 168, and our prior record was 164. So I really had the doors getting blown off for South Dakota. Things look excellent, and our yield samples we had taken out were fantastic, like 210 APHs coming in at 240. So really, really, really good stuff out of South Dakota, and especially that eastern, kind of southeastern side of the state. There are some areas up by like Aberdeen, Spink County that is going to pull things back a little bit, but a pretty good yield estimate. Minnesota there, same thing. The southern part of the state along the I-90 corridor looks fantastic. That's really going to be what holds that yield above 200, I think. If you go from, let's say, like Brookings or Watertown, South Dakota to the Twin Cities, that stretch has some pretty rough corn. I know that's not included on our tour, but just from the routes we've taken there and some samples, they're a little bit lower, heavier soil, so they've been a little bit more wet. But nonetheless, if something does pull us below 200, it'd be that area there. Nebraska at 198 was so weird. It was like we went into a different state. Every year that I've been doing Nebraska for the last 10 years, it's more like Western South Dakota, it feels like a lot of the time. It's a very arid, dry type of environment, and you'll have cracks that you can stick your hand through in the ground. And I mean, they're growing corn on sand, right, Jaden? So, I mean, from that perspective, this year you walk in and it was lush. It was green all the way to the bottom of the stalk, and it was a really nice corn crop. It was unlike anything I've seen. And when it comes to Nebraska crops specifically, rain totally makes grain. And you can totally see that in this year's crop. It looked fantastic the whole way through the state. In Iowa, Iowa's a big state with a lot of different variable weather, and there's always someone who's maybe caught a little bit short or has some weather problems, Jaden. This year it was fairly consistent through the whole state. We pulled out very, very good yield samples everywhere basically, but there was just a few areas that I wanted to talk about there. The first would have been very northwest Iowa. We were able to, on our first stop, get off the interstate around the Hudson exit and work east into Sioux Center. And it was very interesting because that was right where the derecho had just gone through the Monday before it. And we see what you think one every two fields through that mile stretch kind of going east. Seemed like it was hit by that derecho. pushed the corn crop over, left standing of, in some cases 1 to 5,000 population. And then, but it was very narrow. The last time derecho hit Iowa, it was 50 miles wide and destroyed 10 million acres. This one was only about a mile wide, and it was every other cornfield, but it was a pretty consistent line. Now, what that did to that crop was it just took a record out of the northwest Iowa area, and it also makes them very susceptible to disease, fungal problems, things like that. More stress on the crop. They caught some hail and heavier rainfall. They had cooler temps and then hotter temps earlier in the year, so very susceptible to disease problems, I think, as we go the next 2 weeks here. That northwest Iowa, it was record yield probably before, pretty close, and now it's not because of that. And then they're just getting a little too wet. The other parts of the state look fantastic. Western side, kind of south a little bit, was great. Eastern side of the state, we pulled fantastic yields from that. So really, really prime yields. But what was the other spot you thought that maybe didn't live up to expectations out of Iowa's crop there?
Yeah, maybe that Algona area. It seemed like there was some standing water there. Definitely the wetter fields that we've been in so far this tour, and you could just see some yelling and corn in some low spots and stuff like that.
Yeah.
But otherwise, I think they'll do just fine. Just
Yeah, so in that wet spot we're talking about was like the very bottom of the field, and it was, a quarter of an acre type spots, just corners of the field. But in general, right next to that, we pulled out really good yield samples, and the rain came July 20th, is what our farmers there were telling us. So it was late enough where they caught 4-inch rains kind of back to back in a few days. That was late enough that it probably didn't hinder the crop a whole lot. So that's why we have a record yield for Iowa there by a few bushels. It was very good, not quite as good as StoneX, but it's a great yield. Missouri, 180. I think it's okay. Probably not quite a record. Very similar to last year, we thought from that perspective. Illinois, 207 out of them. That was a tough one. As we got towards Illinois, Indiana, Ohio, Illinois, the first one, it's like the satellite imagery, things look great. They've caught enough rainfall. The drought map isn't crazy by any means. They were a little slow planting pace, but nothing crazy there. The problem just was the samples. And, this was a portion of where everything kind of looks fine on the road. And for whatever it's worth, the whole crop tour, we look great from the road on 98% of it, which has never happened really when I've done this. Almost always someone has a bad drought type area or completely flooded out. And we just didn't see that. You had to get in the fields to see the damage. Illinois was the one we trended really hard on Twitter for and some of these other platforms. And it was because of getting in the field. From the road, it was fine. And then when we got in it, that first sample we showed you was, 2 less round and maybe 10 shorter on the long. And through the whole field that we would do the check, it was that way. It was consistent like that. And field to field, it was consistent like that in the same fields year over year. So Illinois was just simply, once we got in the field, the samples just weren't there. They were still really good. They were great samples still. It just wasn't as good as last year. And that really helped us decide, how close are we versus last year with their record? How much off of that are we? That's pretty much where we came in there at 207. That was 9 worse than StoneX, and I think that that was an important factor. It was basically just our sample set out of Illinois. Didn't really see much pollination problems. It was pretty hybrid specific, 2 or 3. It sounds like, in that we didn't see much of the pollination problems. Just not quite as good of an ear through those states. Indiana, 195. It looked fine. It was a decent year for them. Maybe just could have sampled a little bit better as well, but in general, it looked really good. We thought, at least. So that's worth noting there, at least on those 2 states. Ohio was the one that we just don't understand. StoneX at 191. Even some of the other private analysts we thought were way too high, but their record's 198. I don't think they're close to that. I think 180 is much closer. Based on the sample sets, the maturities, even The fields that did catch up and caught back up, they were rushed, so it's just not the same corn crop. That 180 is where we came in at. So a national yield of 184.6. Now, give or take, you could say, well, harvested acres is going to change a little bit. It looks like when we messed with that, it was about a bushel that you could change that national yield just on acres harvested. So 184 to 185, somewhere in that area. Versus StoneX at 188.1, they're the top end of the range as a benchmark for that category. Cool. In general here, I mean, the trade analyst guess going into this August WASDE tomorrow is 184.3. So we're not far off of that, but ours would be a final yield estimate, not what the August WASDE report's going to be. And that's the same for StoneX as well. Their StoneX report is for Farmer Survey as of January's report. Private analyst guess 183.6 is kind of where a lot of them are coming in at. And a record here was this last year at 179.3. And if you look last year, we actually were 183.1 in August, 183.6 in September, stayed there and then pulled it all back in the January report. So something worth noting there from that perspective. If you go to the next slide, you can see the average trade estimate for tomorrow's report, 184.3 on those harvested acres. And July WASDE was at the trend at 181, so a little bit higher and a little bit higher than the record last year. So that puts things in perspective for the corn crop. When you look at a balance sheet of what that yield would do at 184.6, if you kind of highlight over the column for them to look at there, you can see that at 95.2 acres, the second column from the right at 184.6, you can see an ending stocks just under 2 billion bushels, just under 13% stocks to use ratio, so 12.8. So it's not the end of the world when it comes to fundamentals. We get a pretty good start because last year we're only carrying in about 1.34 billion bushels, and that gives us a pretty good head start on not carrying a whole lot over. If you go up to like StoneX 188.1 yield, that's going to be 2.2 billion bushels, and then at that point the market's really probably saying this is too much and we can't get rid of it all. So that's our balance sheet, what things could potentially look like. You'd probably see exports jump up a little bit more on corn, for example, to try to counteract that and try to drag things down a little bit, but not too much. So on the next slide, you're going to see just estimates. So from the July WASDE to August, historically, those left two columns in that chart on the left, you're going to see the change from July to August in the WASDE report. So tell me a little bit, Jaden, about what those numbers look like historically.
Yeah, so historically, the StoneX's yield estimate, they come out for the August WASDE there. Usually in the last 5 years, StoneX is about 1.35 bushels above the USDA's. And if they're guessing lower on the estimate, they're about 0.8 bushels lower in the last 5 years. So historically, they're pretty close on their estimate. So if with a 188.1 guess, it'll be interesting to see if the USDA comes out close to that or not.
Yeah, so StoneX has been very close to the USDA estimate historically in the August WASDE, which is a little scary, but that is the scenario we're living with today. So I thought that was interesting that there's not a whole lot of standard deviation there either. It's not like they missed by 7 bushels. It was like 2 at some of the most. So very interesting. They've been doing that survey for like 30 some years, but this only goes back the last handful or so. On the next slide there, you're just going to see we're in a new world. We're living in a technology world. So when you talk about AI, I thought this was really cool. This just shows if you had yield estimates from a bunch of sources from AI. I think GrainStats had this up on Twitter. He's got some good stuff once in a while. But the AI models alone are coming in somewhere around the 182.3 type area on corn, just under 182 average for their yield estimate. So we'll see how close AI comes going forward. But I thought that was pretty cool and interesting for the major AI type models for them to guess on yield anyways to track. So that's obviously not a whole lot of history behind those. There's a lot of those being newer. But so when you look at the August WASDE, you take 2 things into account. You look at satellite imagery and farmer survey. One, StoneX, their farmer survey is comprised that gives them that 188.1, and that's just they talk to an elevator, and the elevator talks to a lot of people in that area and gives them a number. For example, I know Ryan Moe said he talks to 167 locations through just Minnesota for the StoneX one. So their number's just farmer survey that they get. On satellite imagery, the other portion of what makes up this USDA number, that's it. It's just satellite imagery, NDVI, and then you look at the farmer survey. Just those two items. When it comes to satellite imagery, you can see the one on the left is Iowa State HDVI, so that'd be their satellite imagery for their health of their vegetation index. The right one is last year at this time. So you can just see north, central, northwest. You can see way too much rain last year and very, very difficult. This year, very, very consistent across the whole state, basically, for that. So one, in general, on the next slide, you'll see it on a linear type chart. You'll get a number that shows, hey, for the United States, when you put all the states in there for the HDVI score for satellite imagery, we're sitting very, very good compared to normal. So the gray line, that's kind of the average from 01 to all the way to 2023. And then you look at the yellow line, which is last year, and the red line is this year. So you can tell from this chart that you're looking at, from a satellite imagery perspective, it should say we're at a record in that category on the WASDE report. From a farmer survey report, you had StoneX. So what I'm trying to get at here is both of those lead to show me that we should have a very, very big August WASDE yield number. Like the two things they look at are telling us 188 and 189 on those. Is the August WASDE going to come out at 188, 189? I probably don't think so. I think the WASDE, typically, they like to slow play it a little bit more than that. So last year, they came out at a 183.1. It'll be better than that, in my opinion, and the trade thinks so too. I think it probably should be way more than that based on what they look at for satellite imagery and farmer surveys. I think it should blow the doors off. It'll just depend, how much of that move are they going to make in the month of August, or are they going to slow play it all the way through into the January report? So that's going to be my take on the August WASDE. I won't be surprised if we see like a 186. It would be a little uncharacteristic of them going back through history. I think through that chart, you could see they moved like 7 bushel, I think, at the most in 2016 from July to August. So that was a really big year. Historically, other than that, it's only about 2 to 3 on those up years. So that's something worth noting going into tomorrow's report. The numbers, if you take them, put them all into the next slide, and just this is a chart that shows us the most analytical, most objective way of looking at corn price today. And that would be if you take the 184.6 type trade and give us a 12.8% stocks to use ratio. So stocks to use is on the bottom. So the more that gets bigger, so the more crop you have left available, that gets bigger to the right. On the left hand of the axis, you've just got corn price on March futures of 2026, each year respectively. So when you go to 12.8% stocks to use ratio, the corn market would say historically we should be around 425 on March 26 futures. So at 420-ish, 425 today, whatever the price is here this morning after the open, we're very, very close to where we should be relative to what if we do trade somewhere around that 185 with 12.8% stocks to use ratio. So I think that's a very cool way of looking at, if we do have a 181 yield, what should we come in at price? This gives us a way of quantifying that. And it seems like the lower end in the graph you get on this, the closer we get to that line, the market has it pegged pretty well. The further left you get, it's more erratic, more volatile. They have to price stuff in. If you need corn, you'll pay anything to get it. So it's more erratic on that left-hand side of the chart, and the standard deviation gets way bigger. But on the right-hand side, kind of where this year would point, that usually prices things about right. On the next slide, just from a seasonal perspective, I wanted to compare this to last year because if we do come in a little bit higher on yield and we do come in a little bit bigger on ending stocks to use ratio, then maybe we could see some trade like last year. We've been trending pretty close to last year's progress yeah, on the December futures. So this shows in the blue line there, December 24 futures. We put a low in at the end of August, August 26th last year. It'll be interesting to see if we follow that pattern directly, very close or not. Soybeans made a low on the 16th of August last year. We'll see what the USDA comes out with tomorrow and how the crop trends going forward as well. But you got to remember last year, the big difference was when we hit August, we started to realize it never rained after August 1st for almost anyone in the Corn Belt. So the crop really dried down fast and then demand turned on. So in August, we started realizing exports started taking off. Ethanol grind was really strong, so demand kicked on after we got below $4. And then all of a sudden we realized that big dry down January, we shrunk the yield really hard. So we found a nice, very nice bottom on the end of August. It'll be interesting to see if we don't dry down this year like we did last year, and the soil profile already looks way better going into harvest. A lot of folks don't even need rain going forward. It'll be interesting to see what that pattern does versus last year and normal seasonals. Dees trade below $4. I just talked about it there. Spent less than 30 days below $4 last year. And historically, we don't love to either. So it'll be interesting to see if that trend continues going forward or not. And then spreads. Spreads have been telling us a story of just a big crop coming with big acres in the corn market for a long time. From a spread perspective, we'll see if, we normally try to bottom this thing in the month of August to September. We'll see if that continues this year or not. We've put in historically wide spreads, but the corn market's telling us we're going to have plenty of corn next fall. We're going to want it later on in the year. And the spreads are historically a very good indicator of what type of crop we think we have coming when it comes to the funds trade, at least. And I think this tells a story the whole year so far very, very well. Fund positioning as well, 173,000 contracts net short on managed money on corn. It's a sizable position, but it's not massive. They could put another 100K on that pretty easily. We'll see in the next graph. But on the soybeans, 65,000 short right now. It's an okay short, but nothing crazy. If you had to tell me that, we haven't made any sales to China yet on new crop, for example. If we get past this week, this will be the latest ever, that going back to at least 1999 when we started tracking it. This will be the latest that we've had without China buying any soybeans from us. So that sizable 65,000 short could get a lot larger going forward, depending on fundamentals. This is the chart of managed money corn shorts on funds. So you can see that a lot of folks think we're closer to 200K shorts right now in this market. Last report there only showed about 150. Given just, I believe this was only futures or futures and options, but that's why it's a little bit different there. You can just see that by the time we normally get below 200, it doesn't stay there very long and tries to pop back up. It's pretty comfortable anywhere between 200 short or 150 short, kind of to about 100 long. But nonetheless, it likes to stay somewhat in that range. Anything outside of 200,000 on either direction, it doesn't like to spend a whole lot of time there, Jaden. Any other final comments on our crop tour before we wrap things up, Jaden? We should look at the Q&A as well. If they can post anything in there, go for it. We would love to chat. So please post some questions and we can get onto that as well. But just the crop tour in general this year, the crop was very, very good all the way through. Very good consistency. I just noticed in the Eastern Corn Belt, the samples maybe didn't pull what they should have. And I think that the USDA is probably going to find that as well. Just in the August WASDE report, they don't get out in the field, right? So it's going to be hard for them to realize that, I think, when you look at satellite imagery and farmer survey. Those are probably going to come in pretty high. So should we put in the largest yield of the year in August? I personally think so. What we'll see from price and whatnot after that is going to be tough. A lot of the time, if you would have told me, Jaden, that, well, next year we could potentially be trading a mid 180s corn yield, what do you think price is going to be? I would have been like, well, it's below $4 probably. So it's always tough to see just yield doesn't always mean price necessarily. It has a really strong correlation, but that part will be interesting. So I do have a question here. What have we heard about the tight tassel wrap? Tight tassel wrap happens from delayed planting, and then all of a sudden you have a huge spike in heat, the growth, rapid growth syndrome. So it catches up really quick, Jaden. And that's where we're going to see that issue. Now, I've heard it specifically in probably 3 types of numbers from 2 companies ish. There's a couple companies that have a problem out there in the seed world on it, but it happens from massive rapid growth in a hurry, kind of like we saw in the Eastern Corn Belt after some slow planting pace, or even in the Western Corn Belt in Northwest Iowa, for example, where we planted early, then we had massive, it was cold for a while and it just stayed there. And then all of a sudden we got a lot of heat and the corn plant grew really quick. And then it just wraps around the tassel and doesn't really want it to let back up. So it leads to some pollination problems. Do I think it's going to have an impact on final corn yield? Probably not in a major way. Only a couple numbers, only in some particular areas. Maybe that's why some of the samples aren't pulling very well from Illinois specifically. I think other than that, it's going to be difficult for that to have an impact on final corn yield. It's going to be really difficult for the USDA to see a corn yield impact out of that. Maybe if it's enough in a particular county or region, maybe it'll impact basis, I think, at best. So that's going to just all come from, it's hard to pinpoint it to where it happened at, but I gave you a couple of the scenarios where it would happen at. Now, to actually go find it and go see it, I mean, it's just field samples that people are going to have to send in. So very good question. Thank you for that. What other questions do we got, Jaden?
That's all so far, I guess.
Okay. The other thing just on the crop tour, I think that would be worth mentioning here is that I know I've said it a couple times. We've seen a consistent crop through the whole Corn Belt, and that's very odd. Typically, there's always a problem to drive through, whether it's a drought or a big flooded out area, and this year was just not that case. So until you get in the fields, it's going to be difficult, I think, for the USDA to have a problem with this corn crop in any way below that 184 type yield. The other thing worth mentioning here, I guess, is please keep typing in any other questions you all have. But we're a risk management brokerage company, so we would love to interact with you on consulting opportunities, anything to do with risk management, whether it be for futures trading or cash help or any consulting role like that, or with crop insurance or LRPs or LGM. We've really realized over the past few years that there's a massive opportunity that crop insurance and other insurance products have been tied closer to risk management products when it comes to price risk management. And as we go forward, that's going to be a much bigger part of our toolbox and integrating both insurance and futures trades together to really give you all the tools in the tool belt you need for risk management. But thank you for your time today. We really appreciate it. And we've had a blast on the crop tour once again this year. Please reach out to us and please chat or tell us how your crop is in your area. We're always fascinated by it. So thank you for your time today. We really appreciate it.